Hi, good morning. This is Mark Hutchison with Red One, and
Chris Pankwitz with Rapid Mortgage.
we're here to talk about the process of why you should be getting a pre-approval before you start looking for a home. So one of the things that we look at from a realtor side is oftentimes the listing agent requires a pre-approval letter from the client, from the buyer, prospective buyer, to be submitted with our offer to the seller. That way they know that they have a qualified person to buy the home, and it makes their side easier to determine who they want to do business with. Plus, with multiple offers, they're going to look at the people that submitted the pre-approval because they've gone through the process. And Chris is going to step in here and talk about from a lender's viewpoint, about the pre-approval process and what he needs and the importance.
Yeah, so the biggest thing with getting pre-approved is being prepared. So as a buyer, you want to know exactly what loan program you're qualified for, so you know exactly the minimum down payment requirements and anything else that's going along with with the loan program that you're approved for. This way you can work directly with your real estate agent to kind of set up your own parameters to search for properties that you're, the range that you're approved for and the specific monthly payment that you desire. Getting pre-approved also is something where they're going to collect all of your documentation as far as pay stubs, bank statements, tax returns, W-2s, 1099s, anything they need depending on, your current job basically, to make sure that they've looked over all of your documentation and know exactly, if you're good to go or if there's anything else they're going to require for underwriting. Having this done ahead of time lets you know that if there are any issues as far as with your credit report, maybe there's something that's reporting incorrectly on there, maybe you need to pay some debts down to get approved for a higher range. This gives your lender an opportunity to kind of work with you to get you approved for the range that you desire and make sure that you're ready to go. And especially in this market with houses going quickly, you need to be ready to make a decision quick. So being prepared is kind of the first step to doing that.
Chris, do you offer suggestions on how they can improve their credit score?
Sure. I mean, so everyone's credit is going to be specific to them, but the biggest thing is number one thing that we see with lower credit scores is your revolving credit card. So basically, like your credit cards, having your balances lower is going to help increase your score. So if you have a credit card with a $1,000 limit and the balance is at $900 reporting, that's going to actually hurt your credit score. Now paying that balance down, getting it below 50% and 25%, 20%, you're going to see an increase in your credit score. So that's one thing at home that you could do, making sure that those credit card balances are as low as possible when they report to maximize your score.
I received a couple of messages from Experian, one of the three credit companies. They've talked about, and I signed up for this, that they want you to report your utilities, telephone, and there was 4 different things. They said in a 2 or 3 month period that would increase your score. Is that real, or is that just a ploy on their part?
Yeah, no, so we see that more often now, where people are doing what they consider like self-reporting utilities to help them get that bump, get that jump start to earning a credit score. If you've had credit history as far as auto loans, installment loans, credit cards, student loans, things like that, then you do have established credit history, then it's not as necessary as someone that's never had anything reporting in their name. So getting those utilities, getting something to report your name to start building that trade line history is going to go a long way.
Okay, that makes sense. One of the other items on getting a pre-approval up front is I used to show homes to people without a pre-approval, and we would look at a home for X number of dollars, and then they would find a home that they loved, they want to make an offer, and then they go to our lender, get a pre-approval, and realize that the pre-approval amount is less than the list price of the home. Now my client is devastated that they're not going to be able to buy that house that they fell in love with, and this allows all of us to better understand which homes we need to show you and which ones you can look at because of what your limit is or your maximum. And that's one of the things about working with Chris. If you're pre-approved for 225,000, and Chris can help you get your credit score up, or take some things off that's not pertinent, then that pre-approval could go a little bit higher. And so you just need to work hand in hand with your lender during this process to put you in the best possible light. How else does credit scores, I know this is sort of outside your range, how else does credit scores affect a person and what they do with their finances?
Sure. So, the other part to it is, the higher your credit score, the lower your interest rate. So, essentially, if you have a lower credit score and you're approved for 200,000, well, maybe if we get your credit score up higher, you're going to get a lower interest rate, and it's going to increase your purchase power as well by having that. Because when someone is pre-approved, we set a loan parameter based off a purchase price and based off property taxes. This way, it gives you and your client an idea of kind of a bubble to search in, but the actual way it's approved is based off the monthly debt. So the lower we can get that new proposed mortgage payment, the lower we can get that monthly debt that's going to report, the more that you're going to be approved for. So like you said with the credit, the higher credit score just means you're going to have a lower interest rate. And then if we're looking, for instance, on like a conventional loan, you also are going to have mortgage insurance if you're not putting down 20%. So having a higher credit score equals a lower mortgage insurance rate as well, which again is kind of increasing that purchase power that you're kind of looking for as well.
Okay. The credit scores go a maximum of 850. Does anyone ever get 850?
I mean, I honestly, I think the highest I usually see is like 820, 825 when we pull from the three bureaus. I've never seen it above that, but I've seen some immaculate credit reports, and I do, I've seen them all 800, all three from, Experian, Equifax, and TransUnion, but I think like 820, 825 is like the highest I've actually seen. So, I mean, but, something I let everyone know is when it comes to your credit score, being like a 780 or being an 820 is essentially the same range. You're almost maximum qualified, I should say. So, credit is kind of tiered, from a 620 to a 640, 660, 700, like all the way up. Every kind of 20 points is going to change, as far as like interest rate, mortgage insurance, things like that. So, anyone that we're working with, and going back to what Mark said, getting pre-approved ahead of time, maybe you come in at a 660 and maybe you're looking to purchase this summer. Well, that gives us 4, 5, 6 months to get your score, to maximize your score before you're ready to purchase. So maybe by June, July, when you are ready to purchase,
right,
we've increased that 660 credit score to a 720 credit score, and essentially could have changed your monthly payment by $50 to $100 a month.
Okay, well, thanks, Chris. You want to give them your telephone number in case they want to call you?
Yeah, so feel free to reach out to me on my office line directly. It's 614-845-5212. And yeah, we'd be happy to help, take a look, and provide any assistance we can.
All right, thanks, Chris. Appreciate it.